India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, and it's not a pretty picture from overnight as far as the US market is concerned. By the way, just FYI, it's yesterday's news, but it was the 14th straight positive close. We ended 1 point higher after all that adjustment of the last 30 minutes of price action. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi guys, good morning.
Morning.
I woke up and in the morning I was thinking about what you said just yesterday, or I think, the first trading day of September, that it's a wishy-washy month.
Yeah.
And bam, we wake up this morning to an absolute sea of red out of nowhere.
Well, that's right. In Nvidia, right? I mean,
Yeah.
who would have thought in a single trading session loses $300 billion of market capitalization after the big run that we're seeing. So that's a bit of a sticky spot, and that's clearly the whipping boy overnight.
I mean, all kinds of reasons, right? I mean, in terms of what's going on. Nvidia is a big one. I think the biggest, single biggest sort of mover, because it's got so much influence and weight. So, but let's start by telling you the price action from overnight, because I think that's the dominating driver. You have S&P, which was down about 2.25%. NASDAQ was down about 3.25%. So these are large cuts. I could sort of have put in the Russell 2000, which is the small cap index as well. That's down about 3.5% as well. So, pretty large cuts. Now, there is no sort of one big smoking gun which you can sort of pin all of this sell-off to. It's basically a bunch of things, and I'll just run you through a few. So you had the ISM manufacturing data out of the US which came through. All three components were basically weak, were in the contractionary zone again, not for the first time, but once again. Specifically, you look at something like new orders. New orders was down once again, and I think it's the lowest since the middle of 2023. Essentially it's a forward-looking part of the ISM manufacturing data, which kind of tells you what the business momentum, etc., is looking like. And remember, we're in that phase of the market where bad is bad, and people are trying to assess how, is the US economy weakening faster? Will that basically mean faster rate cuts? So it's not, bad is good kind of a phase of the market that we're in. There is seasonality. Now, I think, I mentioned this, as Surabhi said, on Monday. September typically is a tricky month, but more so because you are going into an election. So if you look at the S&P 500 or the NASDAQ for that matter, and you look at what September looks like, but you separate the years where there is an election and the other years, there is a very clear kind of divergence. Election years, starting sometime August all the way to the November election phase, the market is down. It's a very clear, pronounced kind of trend. This is going back from about 1980 in the 80s all the way till 2023. So, and of course, otherwise, ex the election years, September is not really that bad a month, although it's not great. So I think there is a seasonality aspect of it, but I think it's well advertised. I heard, some essentially saying that, well, we'll be down, but it's a buy the dip and then we'll move up. It's almost as if, some of the commentary seems like it's straight out of a book. It doesn't happen like that. These are markets and sort of dynamic environment. Now, there is the other thing as well, right? Buybacks from US corporates is perhaps the single biggest technical factor in the US, which supports markets, which supports equities. Guess what? You're entering a bit of a blackout period starting, I think, the 13th or the 14th of September, pretty soon, ahead of the third quarter earnings season in the US. So for a while, you will not have that powerful factor. And then I come to the Nvidia sort of aspect as well. It's stock down about 9.5%. If you look at the entire semiconductor pack within the US market, I think that was down about 7% or so, but largely thanks to Nvidia. There is, of course, this news headline which got a fair bit of play, which is the Department of Justice subpoena in escalating antitrust investigations. But there are other things as well. For example, there is a news item which says that OpenAI is working on their own chips. And a couple of other things as well. So after earnings, there was a bit of a disappointment which got bought into. But after that, you basically have a pressure coming through here. I'd like to add that Nvidia now is if that 20% fall is a bear market, Nvidia is in a bear market. From the highs, the recent intraday highs, Nvidia is now down about 24% or so. It's sort of blown through the 20, the 50-day moving averages as far as technicals are concerned. A few other things. This is again price action. CBOE Wix with the volatility index in the US that went up some 33% to about 20.66. The 10-year was down about 7 basis points to 3.83. You had oil prices down 5%. And we'll talk more about this. There were, talks that Libyan production could sort of come back on, etc. But maybe that is the reason why more oil in the market, so prices down. But I think there was also the element of general sort of risk-off, which was playing a part. Just to circle back to levels here, I think you keep a keen eye on supports here more than anything else. We've gone up for 14 days in a row, although yesterday was barely up. Support comes in at the 40 hourly exponential average for the Nifty, which is 25,164. That's the first level. You break that and you stay below that, then you will start to look at retracement supports. Retracement of what? The retracement of the recent rally from the lows to the new high that the Nifty made. So the first number is 24,783. I mean, it's far off, right? 24,800 roughly. Keep that in your mind. That's a 38% retracement of the rally that we've seen. Then I come to the Nifty Bank. Here, the support comes in. The first support comes in at the 40-day exponential moving average, which is 51,003. We left off at about 51,700 as of yesterday. So it's basically less than about 1.5% away from where we left off things. And then we'll again look at retracements, etc., because the rally on the Nifty Bank has been much weaker as compared to what we've seen on the Nifty. Stay out of the way. Let the market settle. It is possible that US is in for a little bit more in terms of two-way price action. A little more pressure is also possible. So no need to be brave and buy every day. And maybe deleverage as well. I mean, if you're heavily exposed on the F&O side or the option side, reduce that and focus on the portfolio more than anything else. So 160 points lower is what the GIFT Nifty is indicative of in terms of the dip that we will begin the day with. Surabhi.
Well, absolutely, Prashant. So pretty much covered it. Just to add over here, that safe haven sort of sentiment is playing out even on the currency side. The yen, for instance, this morning is higher versus the dollar. So that's sort of an add-on that's continuing. Just a point on the manufacturing data, because there were two different sort of prints that came in on manufacturing, and both were pointing to weakness. So basically, both were lower than market expectations. One was the ISM manufacturing index, which came in at 47.2. Which is actually an improvement over July, and this is the other one. This is the, that's the ISM one that I'm talking about. 47.2, which is better than July, which was 46.8, but the expectations were higher, and those expectations were not met. So that was with the ISM. The problem with the, S&P Global Manufacturing PMI, this is the US PMI that S&P Global puts out. That number was at 47.9, which is a sharp decline from the previous month and also lower than expectations. If you go by this index, then the manufacturing data is at an 8-month low. The index is at an 8-month low, and that's what pretty much was playing out. And a lot of this issue with Nvidia that's playing out on Asian semiconductor stocks or the companies that are in the semiconductor supply chain this morning, and a lot of them come from, for instance, Korea, Taiwan. So all those markets are reeling under pressure. If you pull up most of Asia right now, there's not been much of a recovery. About 3.5% down in Japan. Hong Kong's opened out. It's about 1.5% there as a week as well. Not much to add really in terms of cues here. Just to talk about the numbers. FI's net buyers to the extent of 1,030 crores. Domestic institutions were also buyers, but for a change, both were on the buy side. DIIs were buyers to the extent of almost 1,900 crores. In terms of individual stock action, I'll just restrict it to pointing out that GIC, and this is a news break. I mean, Yash was telling us, and this finally became official, the government will be divesting close to 7% stake in GIC. And for the non-retail participants, it opens out today. For retail and employees, it opens out tomorrow. Watch out for this. And then supply is going to be in focus. Not that it has too much of a bearing on the stock, but after many, many years, someone who's seen as perhaps the father of the Indian pharmaceutical sector, Mr. M.K. Hamid, he is going to be, putting down his papers. He's resigned from the post of vice chairman and non-executive director because of age and health reasons. And his son, Kamil Hamid, is going to be joining as non-executive director from the 1st of November. So it's the end of a long era, a glorious innings of Dr. Y.K. Hamid in terms of his active corporate life. But I guess, all that aside, it's global, and we need to brace for the storm, and how we get through the first sort of that opening gap and what happens from there, I guess.
Well, that's right. The weak global Q as well. They are going to put a challenge to the Nifty's 14-session winning streak. And by the look of it, well, we may not see the 15th, but let's see. The recency bias tells us that you need to buy the dip. So let's see whether or not that works out even in today's trading session. The Nifty Bank, that's going to be the key for me today. It plays out the weekly expiry, and yesterday it had a bit of a breakout moment towards the end of trade. The last 60 minutes belong to the Nifty Bank, so we'll keep an eye out on that one. The bulls could turn to the Nifty Bank in today's session. One positive is crude oil prices have moved to its lowest levels all the way since December, which will support select companies like the paint companies, which I'll get to in just a bit. How is positioning on the index futures? Well, the FIs, they are net long. The long positions are at around 70%, which means the shorts are at around 30%. And the clients, well, they are net short, and they have their short positions at around 60%. So both of them, as we've been mentioning, they're opposite ends of the spectrum. And normally we have seen that the clients get it right. So I think maybe a bit of a pullback or some consolidation is what we're bracing for just in the near term. The PCR had gone out of whack a couple of sessions ago, went to around 1.5. It's cooled down to around 1.2. So that's more or less in the middle of that broad range out there. No big movement overnight as well. Well, the put writing, that did continue yesterday, and those strikes are going to be in focus today as well. So the 25,200 put in particular, that saw a lot of writing in yesterday's trading session. Roughly around 50 rupees was the premium out there. So looking at the options data, I'm giving you two support zones. One is the one that at around 25,100, 25,150, crucial level. You know, this one, we're going to be starting off closer around this 25,100, going by the GIFT Nifty, but you want to end above this level. So that's the important mark. And, going further down, then you're looking at the 20, the 50 DMA that comes in this vicinity of around 24,500 to around 24,700. But the Nifty Bank, as I mentioned, it had a breakout moment yesterday because you had, you had both ICICI Bank as well as HDFC Bank that ended at the high point of the day. And that's why it crossed that 50 DMA on a closing basis. The level to look at based on the options data, based on the technicals, in today's session is 51,250. It plays out the weekly expiry, and the bulls could very well turn to the Nifty Bank for today's session. As I said, crude oil prices have pulled back, which means that paint companies that in the last 1 year, we talk about the markets being in a world of their own. Well, paint companies are virtually unmoved because of the dynamics of the paint sector. You have a new entrant out there. So both these names are something that I'll focus on. Lower crude prices normally means better, gross margins for them, since prices as well have moved up. So maybe we look at both these two names.
Well, absolutely. A big 5% drop as far as oil is concerned. So some of these oil sensitives typically make a bit of a move. Cameron Brandt is with us, Director of Research at EPFR Global. Cameron, great to have you with us here. Good morning. Thanks for your time. I mean, just a quick word on what we saw last night. I was saying it's a bunch of things coming together, and there is that seasonality which I think everyone is talking about. But one wonders where was the seasonality last week? Because it should have worked last week as well. It did not. So what do you think really is the dominating driver, and where do we go from here?
I think that we're likely to go back to more benign scenarios. Certainly investors here in the U.S. want to believe that they're going to have the happy combination of rate cuts starting in September and an economic landing that is soft rather than hard. As you said, not surprising that people came back from the summer holidays and things got a little bit rough. We'd certainly seen sort of an early run of that at the beginning of August. And Nvidia has had such an amazing run. You had to think that gravity was going to claw back some of that amazing height that it had attained so far this year.
So, Cameron, hi. Great to have you on the show. So what's the sense? I mean, this volatility has come back after a couple of peaceful weeks. What do the flows indicate right now? Is money still going in US tech, or is there a change? What are the new patterns that you've seen in the last couple of weeks?
So, yes. So the overall pattern, as I said, is that people still want to believe in a tech-driven US soft landing that is given an extra boost by an easing cycle starting at the end of this month. And the recent flows have not capitulated, though obviously I've yet to see the data for today's action, which obviously could tell a slightly different story. But in terms of sort of the markets and themes that investors have backed consistently this year, for the most part, we're still seeing the money go there. That obviously includes India, while maybe not at the elevated levels we got used to last year and into this year. Dedicated India funds are still getting healthy inflows week in, week out. And the GEM picture, the diversified fund picture, is beginning to get better. The ones we track have posted consecutive weekly inflows for the first time since March. And the latest allocation data has India at a fresh record high. So if that trend holds, and I think it's likely given expectations for US interest rates, that's likely to give additional foreign support to the Indian market.
Okay, all right. Hi, Cameron. Good morning. Good to see you, Ben. So how do you compare the flows, in the recent past in comparison to what you say a month or so ago? I recall that when you joined us the last time around, you said the flows are pretty stable into India. Any change on that?
No, they remain really surprisingly stable. There was definitely a bit of a flattening as investors digested, I think, the potential tax implications that were buried in the budget. But for the most part, I think Indian equity funds, the dedicated ones, last posted a weekly outflow in the first quarter of last year. So it's been a tremendous run, and it really hasn't been threatened. There was 1 week where I thought the streak might end. But no, for the moment, the picture for India looks very good.
Cameron, any sort of noticeable changes in terms of flows going into Japan or the fact that there's been a very thin flow going into China? Any changes with respect to Japan or China?
Well, actually, good that you mentioned that. Yes, the flows to Japan equity funds have been perhaps some of the more volatile among the major geographic and single country fund groups. But before this call, I checked on one theme that we've seen over the past year, which is very strong appetite by Japanese investors for exposure to India. Japan domiciled India funds have had a very good run. And that run is still continuing. It checked at the beginning of this month, but has picked up again. So wherever it is that Japanese investors are rotating out of, in light of the sort of somewhat changed monetary circumstances in Japan, it's not India.
Got that. Thank you very much, Cameron. Yesterday there was another article, or I'm not sure where I read it, but it struck with me. I mean, chaps in finance are famous for coming up with all sorts of fancy descriptions to describe mundane things, right? So, for example, yesterday somebody said that the yen carry trade is like the San Andreas fault line.
Where did that come from?
That it's not done yet. That's essentially was the point.
Oh, okay.
That Japan is going to increase interest rates. It's going to continue to increase interest rates, even though they're in a bit of a hole because of what happened in early August.
Okay.
But it's coming. More is coming. And so it will destabilize global markets. I think it was... not sure where I read it. So
the interesting view, and it's a slightly contrarian one, compared to the comfortable market wisdom that BOJ will stay on hold now that the Fed starts cutting.
No, so on hold till the end of the year because of what happened in August, because they don't want to sort of spark that again.
Markets,
But I mean, they're headed higher. That's essentially the view because inflation is back there. Well, Cameron, thanks once again. We'll take a quick break here, but we'll sort of also run you with some opinion that we are getting, right? This is Kunal Sodani of Shirin Bank, who says the markets raise their bets on a more aggressive rate cut after weaker U.S. manufacturing PMI data. He says positive Indian equity market, inflow of foreign funds and a decline in oil prices could limit the rupee's losses. However, he adds increased U.S. dollar demand by importers and safe haven flows ahead of the key U.S. labor market data might weigh on INR. For the USD INR, 83.85 to the dollar acts as a support, while 84.05 to the dollar is a bit of a resistance.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a very narrow range of 6.86 to 6.88% in the last 1 week. On Friday, he says the GSEC auction saw firm demand despite higher US yields, post stronger US GDP and personal consumption data. India first quarter FY25 GDP came in at 6.7% YOY, in line with the consensus market expectations. He's expecting the 10-year benchmark bond yield to trade in a range of 6.85 to 6.95% for this week and take cues from US non-farm payroll data, which of course is due this Friday.
Well, we've got a lot of stock-specific action to track for you today. We get to that in just a bit. For the time being, we run you through the list. We look at HAL, BEL, Mazagon Dock, Garden Reach Shipbuilders, Kochi Shipyard. You have Bharat Forge, IEX, Havells, AU Small Finance. A lot of stocks will be reacting to good news. But let's see if they open up in the green. While we have one stock that will be reacting to negative news flows, which is GICRE. I'll tell you what, we'll slip into a short break. You come back, we'll get into all those top 10 stocks in further detail. Back. Well, a lot of stocks to track, so let's get straight to the action. Then we have our research team who's standing by with CNBC-TV18's top stocks for the day. Let's start off with the defense stocks. Upasana joins us to run us through that list. Upasana, morning.
Good morning. Defence Acquisition Council has approved 10 capital acquisition proposals worth 1.45 lakh crores. And according to Phillip Capital, some of the key projects include procurement of future-ready combat vehicles, for which L&T and Bharat Forge are expected to be the major contenders for this contract. Also, procurement of air defense fire control radars, for which BEL, Data Patterns and Astra Microwave are likely to benefit from this project. Dornier 228 aircraft has also received the nod for Indian Coast Guard, for which the brokerage believes it is a positive development for HAL. Next generation fast patrol and offshore patrol vessels have also received the nod, for which Mazagon Dock Shipbuilders and Cochin Shipyard, Garden Reach Shipbuilders are the potential beneficiaries. Hence, all these stocks remain on our radar, and I expect all of them to open in green today.
All right, Upasana, thanks very much indeed. There was so much excitement on these stocks even yesterday in anticipation of that meeting. Let's move on and talk about the CNBC-TV18 news break that got confirmed. Yash was telling us about a possible OFS in GIC, and Yash, it is indeed happening.
Well, that's absolutely correct, and it's been long awaited. 2017 was the listing, and after that, government hasn't sold any stake. So 6 years after the listing, the OFS finally being approved by the government when it comes to GICRE. This will be good news in a larger context for the company, because there'll be more supply that will come into the market. Right now, just 15% into the public market, 85% with the government, and out of that 15%, also 5% with LIC. So, of course, good news in the larger context. But the reason why I'm going with red is because of the discount. The floor price, of course, is about 395 rupees a share, which is 6% discount to the price where the stock closed yesterday. The market was anticipating somewhere above 400, but that's come a little lower. So that's why I'm going with a discount, slightly less than 7% stake up for grabs as far as the GICRE OFS is concerned. The government looking to raise about 4,700 crore rupees through this OFS.
All right, Yash, thank you very much for that. So that's GIC, which we will keep an eye out on. There is also IEX, which we want to sort of focus on. Vivek has got details. Vivek, good morning.
Well, good morning. The month gone by appears to have been very strong as far as the short-term power market is concerned, especially when it comes to the volume activity. Total volumes up almost 36% on a year-on-year basis for IEX, coming in at that over 12,040 million units. The total electricity volume at IEX was up 17% on a year-on-year basis. Now, the key market that the company has, which is the DAM market or the day-ahead market, that saw volumes higher by almost 22.5%. Now, this was actually aided by the fact that there was a significant dip as far as pricing was concerned. Pricing was down almost 38% on a year-on-year basis. What led to the increased sell-side liquidity? Number one, good monsoons ensured that there was increased supply as far as hydropower was concerned. Now, coming to the real-term, real-term market, total electricity volumes up almost 27.3%, and very interestingly, renewable energy certificate, a newer vertical for the company that saw almost 8.5 times increase as far as the volumes are concerned. This on the back of the fact that prices over there dip significantly, and companies generally go ahead and do this to meet the renewable purchase obligations that they have.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go to Vamakshi. She's tracking a couple of more names, Havells as well as AU Small Finance Bank. Hey, Vamakshi, morning.
Well, good morning, Nigel. Let me first start off with Havells. The company has started commercial production of cables at Tumakuru on 3rd September, that is yesterday. Additionally, the company has announced its plans to further expand its cables manufacturing capacity from 3.5 lakh kilometers to 4.63 lakh kilometers per annum to cater to the potential demand in the same facility. Additional investment of around 450 crores is what the company will need, and the production is expected to commence by September 2026. So given these factors, going with the green for Havells. But apart from that, EU Small Finance Bank is also expected to open higher, and that is because the company has submitted application to RBI seeking approval for voluntary transition from Small Finance Bank to Universal Bank. Now keep in mind that SFBs generally have restrictions. Example, they need to keep nearly 75% of their loans below 25 lakh. They have minimum 25% branches in rural areas. So all of this is rather restrictive to growth. But universal banks, on the other hand, have no such restrictions except nearly 40% of loans to priority sectors. So therefore, this transition to Universal Bank will bode well for EU Small Finance Bank, and given those factors, going with the green for this counter.
Okay, all right, got it. Thank you very much, Vamakshi, for that. So let's quickly recap our list of stocks to look at this morning. The ones that have positive news flow, of course, some of the defense names like Hindustan Aeronautics, BEL, Mazda Shipbuilders, Garden Reach Shipbuilders, Cochin Shipyard, Bharat Forge. IEX is in focus on the back of the monthly volumes data. Havells and AU Small Finance Bank also on the green side. The only stock on the radar on the red is actually GIC-RE, as we expect that OFS to get underway. All right, so that's the stock list of the morning. Now let's look at a roundup of all the commodity market action. There's so much going on here with the general sense of risk aversion and risk off. Manisha, good morning. Where do we start? Maybe crude?
Well, yes, almost everything, especially in the non-agro space, has started Asia on a weaker note. That's the direction we've been headed in, but the steep decline that we saw overnight clearly brought in a lot of funds to widen up their long positions here. So the crude oil prices, well, yes, have declined 5% overnight, trading at a 9-month lows onto this one. The China data has been on the weaker side. The Libya output is now coming back on board, and then markets also are looking at the U.S. summer driving season. That is ended with a deficit as well. Similar is the case with metal prices. Sharp declines onto this one. The weak China PMI data clearly has dented the sentiment here. So overnight, we've seen 1 to 3% of a cut coming in for metals like platinum, steel, zinc. Copper is now back below $9,000 a ton as well. And it's a similar scenario for precious metal prices, where gold and silver prices also have continued to decline, trading at multi-week lows right now. So the only thing that the street is now watching out for is the U.S. non-farm payroll data. Well, that comes in on Friday. But ahead of that, the strength in U.S. dollar clearly weighing across board.
Okay, all right, Manisha, thanks a lot for that. Well, for the time being, though, we'll slip into a short break. You come back, we'll have Deven Choksey, who will be joining in to help us with some fundamental analysis. Stay with us. Welcome back. Well, let's focus on a lot of stocks then, and we have Deven Choksey who joins us on the show. Hi, Deven. Good morning. Hope you're having a good morning. Well, it appears we're going to pull back a little bit to kickstart trade because of the overnight jitters, but that won't, will be more stock-specific market, so to call it. Now, overnight, we have news that DAC has approved 10 capital acquisition proposals worth around 1.4 lakh crore. This piece of news will clearly boost up some of those defense names, though they were up yesterday as well. What's your preference on the back?
Hi, Nigel. Good morning. Well, I think this is more or less in continuation with, the entire program that the government has announced already. And the amount of money allocation which has happened, I think it is already known through the budget. So from a particular perspective of, I think, seeing any particular company getting benefited out of it, not completely sure at this point of time, though the known names are pretty much known and present in the marketplace. Only concern that one would have that I think all the positives, everything is definitely seen long-term positives. The roadmap and the runway looks absolutely clear. In the present circumstances, the valuations are fully factoring everything into it. Maybe I think some of the private sector companies which are part of the ecosystem in the defense space, they could be probably some of the beneficiaries, and they may include the companies which are in EMS space, in the manufacturing and in R&D. They may include companies in companies like solar industries, where probably I think they have got the higher amount of focus also on the drone segment of the business now. So such kind of companies could possibly play a slightly bigger role going forward, as we see the higher amount of money getting allocated for the purpose. So to a greater extent, I believe that I think it's a long-term play. Normally market get little excited in the short term with the news, but otherwise I think it's more of a long-term play for most of the investment stocks.
Devin, just to follow up on that, good morning to you. Within the defense space, what would your preference be? For instance, a lot of the shipbuilder stocks, they have been going through the roof, and we spoke with Garden Reach just before the announcements came as well, and they were really looking forward to a lot of these orders. But again, shipbuilders versus a stock like HAL versus something like BEL, BEML, where do you still see some sort of valuation comfort, along with, of course, the growth potential?
Well, good morning, sir. Good potential remains, I think, equally there in each of the space that we have talked about in respective range of the products, I think, category that they cater to, including HL, which looks, I think, brilliantly positioned, no doubt about it. Within the shipbuilders, the prices have corrected to a certain extent, but I think they still hover around 40 times to 60 times price earning ratio, even on a trail basis. Even if you discount it, I think on a future earning prospect basis, they are not completely expensive at this point of time, but I think slightly moderated on the valuation. So yes, I agree that I think some correction in the price is a good opportunity to buy into these stocks, given the kind of visibility that they have. More importantly, one would ask a question to most of this management: what is going to be the run rate for execution? I guess I think the order book is clear, the visibility is clear. The execution part, I think, is something which one will have to look at. If they continue to grow at 15 to 20% rate of growth, and on the other side, the market gives a 60 times price earning ratio, quite possible that there is going to be some amount of rationalization on the valuation. That is what my take would be. Otherwise, I think the respective companies which you mentioned, within that HL, VEL, both looks interesting. Even VML to a greater extent looks interesting from the current perspective.
Okay, all right, got that. Devin, since we're discussing stocks in news, AU Small Finance Bank, I mean, it's very clear they have aspirations and ambition to become a full-scale bank now. Your thoughts on the stock?
Yeah, I think, I think there is nothing wrong with the kind of expectations that one would have from these companies to become universal bank, full finance company, etc. In my viewpoint, I think two things are going to be driving the growth in businesses for most of the companies. On one side, you will have to have significantly large amount of book, I think, which could probably be used for competitive pricing in the marketplace. And at the same time, the digital infrastructure, the fintech infrastructure that you require to have, so that I think on one side you process the loan faster and at the same time distribute it, I think, equally faster. So that is going to be the demand from any player who is entering into this space. And last but not the least, I think the one who has got higher amount of customer access points. And that's where probably I feel that some of the larger NBFC companies or some of the larger banks, we have created a situation of accessing the customer points, I think, much better. They would be relatively better off compared to the smaller ones. And I would rather like to put my money behind the ones which are basically showing the larger amount of market growth side. Because fintech would necessarily mean that they would be having, if on one side they have a customer, on the other side, I think if they have the platform for technology, I think the processing of the loan will be faster. That is what I think we are all asking for, the growth rate. The growth rate would probably be much better in likes of Bajaj Finance, likes of Jio, likes of ICICI. I think they are remaining relatively more stronger proposition.
All right, Devin, on days like this, people look to buy some quality names when you have a bit of a roller coaster ride. And paints is a sector that I was just highlighting earlier this morning. If you look at the Nifty, it's done very well in the last 1 year. The sector that's not participated is the paint industry, because you had a new competitor that's coming in there. They couldn't push through price increases as well. But now it seems that valuations are a little more reasonable because of the underperformance in the last 1 year. And you have crude oil prices that have come down, which serves at an input cost, which will be good news for them. How do you approach some of these names? Asian Paints is still down 2-3% in the last 1 year. Berger Paints has well not given any returns. So in the last 6 months, these stocks have tried to make a comeback. I think they're up 6 to 10% odd.
Yeah, spot on, Nigel. I think on one side you have the lower raw material price, the input cost, I think because of the crude oil. All the crude oil derivative prices are going to be remaining lower going forward as well. And that gives you the margin comfort, which is what I think likes of Asian Paint would have maximum benefit out of, because they are an integrated player at the same time. On the other side, I think the market is growing. So the checkpoints, the distribution points, I think is going to play a major role. Again, I think Asian Paint is, very favorably placed. The new generation of the new companies which have come up in the paint business, they certainly have a long way to go as far as I think their ability to reach out to the end customer is concerned. And as a result of which, I think the volume pickup in their business, I think they probably be taking some time. So in my viewpoint, I think if one is looking at the steady rate of return and given the kind of model that Asian Paint is pursuing, I would think the home decor model that they are pursuing, I would think that I think they would be relatively better choice to buy into. Maybe not high expectation on the appreciation side, but around 15% kind of an appreciation, distinctly possible if one is holding it for 12 to 18 months.
Okay, all right. Devin, stay on. We were just discussing defense stocks, right? So let's go back to that big story where the huge headline is that the Defense Acquisition Council yesterday approved a procurement, projects and sort of a procurement worth 1.45 lakh crore rupees. That's the extent of orders that will be out. We have Atim Kabra, Director of Business Development and Strategy at Astra Microwave Products, to talk about the opportunity ahead. Of course, Astra is a major player when it comes to electronic warfare, aerial radars, etc. Mr. Kabra, good to have you on. So first up, straight question. In terms of all the announcements yesterday, were there projects that you cater to as well, segments that you cater to? I'm not sure if specifically there were announcements on the radar side. Tell us what's the opportunity for you from what was announced yesterday?
Hi, good morning. The projects which were announced yesterday amounting to 1.445 lakh crores were 99% by Indian and IDDM, but mainly I think the naval sector plays were the biggest beneficiaries out here. There has been a long-standing project which has been going on the ready combat vehicles, and I think that is also something which saw light of the day. Nothing, as you rightly pointed out, nothing much for Astra Microwave as such over there, or the radar or the electronics guys out there in this particular order which has been released.
Right. Mr. Kabra, hi, morning. Prashant here. Could you tell us, between forces, right, what is the breakup? How much is for the Navy? As you said, majority is the Navy? Approximately?
Yeah, majority. I don't have the breakup honestly at this point in time. But if you see, they had the next generation fast petrol vessels which were announced. Next gen offshore petrol vessels were announced. So these, by the sheer fact that they are very, very costly in terms of the overall outlay, it is a majority share which has gone to the naval segment at this point in time.
And, there are, of course, PSUs, right? Like there's
yes,
Mazgaon and Garden Reach, and there's others as well. So these are, would you say, the biggest beneficiaries from what was announced yesterday in terms of being bidding for these projects?
My understanding would be that, exactly.
Hi, Mr. Kabra. Good morning. I'm just looking at a couple of notes, and they suggest that the air defense fire control radars, that's a spot where you have exposure and you could potentially be a beneficiary. And that's part of the approval list. Could you tell us what is the total quantum and normally how much of it could you garner?
I don't know the quantum, but see, radars, the basic components are TR modules, right? And we make the basic TR modules for all, and they are the building blocks of all radar systems. So to that extent, they may be sourcing, but as an overall project implementation agency, that doesn't come to us. That's how we look at it,
So you're not making the end product, you're making, an intermediate.
As a component, subsystems. As far as this particular fire control radar is concerned, air defense fire control radar is concerned, we are not the project managers or the systems integrators for that.
I'm sorry, I'm being a little unfair asking you about other companies, but I mean, you can since you have a sort of overall idea of what's happening in the industry, would HAL be a big beneficiary of what was announced yesterday?
I don't think so. I don't think HAL is the entity which has the contract for this, but I may be famously wrong out here, honestly.
Okay. So there are shipbuilders, the Navy guys, who are, of course, a clear sort of winner out of all of what was announced yesterday. Any other segments, which you think will benefit incrementally?
See, this industry, the way I see it is, this order is a continuation of the self-sufficiency story which is being built around, or which has been built around in the defense space, right? So the way we are seeing it is, this is an industry which has now come, is just coming into its own at this point in time, right? So the order book continuation which happens gives you a very strong sense of the momentum which will be maintained over a period of time, over years actually, and the direction in which the government has very clearly said that it has to be self-sufficient. If I'm not wrong, I believe almost, except for one or two, all the naval vessels which are being built are actually indigenous. And that is a direction which has been set, which speaks really well for an industry which is beginning to take shape out of nowhere. See, at the end of it, you are a play on GDP, 3.5% of the GDP is defense, right? It is as core an infrastructure as anything can be, and a lot of it used to be procured. But if you see the order book, which was the orders which were released yesterday, 99% are Buy Indian and IDDMs. Right?
No, absolutely.
And I think you have to give a huge round of applause to the government for its clarity out here.
Yeah, no, absolutely. And Mr. Kabra, I think the market has given a thumping, resounding round of applause by way of sort of bidding up the stock prices because of the opportunity, right? Just finally, so while in this round you're saying that maybe there's no direct benefit for you or sort of the kind of projects and the equipment that you execute. Going forward, just tell us the visibility. That the last number that we have, that your order book as of June was, I think, 2,365 crores. Your target is revenues of about 1,000 to 1,100 crores this year. So does this factor in a lot of additional orders that may come up? Or this 1,100 crores will happen only by executing this current order book?
This is only by executing the current order book. The way it works is the order book to billing is about 2.5, 2 to 3 years, if I may say, typical conversion. So these are ongoing orders which are there, and you are now expecting some really large order books, just like you're seeing it on the naval side. You will actually have a lot of upgrades happening on the planes which we have, right? So you have the new planes, LCAs, which are being built, as well as MiG-29s and other programs which have been put in place. You have QR SAMs which are going to be coming in, So, this is a very, very significant movement, I would say, for the defense sector as it continues to take a shape of its own.
Okay, all right. No, very well put by Indians for India, and it's a big one, what was approved yesterday. But I think also important insights for viewers who are watching from a stock perspective. It's largely focused on shipbuilders. So I think, that's coming in from an industry veteran. And Mr. Kabra telling us that he doesn't think that HAL would be a big beneficiary on the back of what was announced yesterday, the projects which have been put together yesterday. So it's largely sort of on the shipping and naval side, vessels, etc., which have come in. Mr. Kabra, it's a pleasure. Thank you very much for joining us, taking our call and explaining all of that for us. We'll take a quick commercial break here. There's, of course, 13 minutes to go for the pre-open session. We'll be back. Shilpa Raut and Sudarshan Sukhani will be with us with some technical trading ideas. Stay tuned. Okay, welcome back. I think there's a bit of a cut, which is we're going to see at open. 160 point lower is the implied open lower. Shilpa Raut, the Prabhudas leader, is with us. Shilpa, good to have you with us here. Good morning. Thanks for your time. How are things looking? It's a lower start, and we perhaps will. I think. Do you think we'll go down to? We'll need to look at retracements of the rally. So the first 38% retracement of the rally from the lows to the recent high is around the 51,000 mark, 51,003. Do you think if there is a bit of a pullback, eventually we get to that?
Good morning, Prashant, and thank you for having me on the show. Talking about today's setup, yes, it looks like, we might settle down around 25,000 zones for Nifty because that is a very crucial support. If we breach that, then, probably a more 500 to 600 points of cut from there can be, tested. In that case, 24,400 to 24,300 zones. This is the range where you will find the other support. Otherwise, I believe, Nifty is not that, negative on the data setup. The dip today can be used as a buying opportunity thanks to the crude fall as well. So I believe that will be a very positive trigger for the market today. And talking about the setup, we see that FIs are still net longs at 70%. And today's setup looks like it will be a buy on dips market for the day. Talking about Bank Nifty, like we have been discussing, it has to hold and sustain 51,500 decisively, which we did yesterday. And if that momentum continues today, then we will see 52,000 to 52,300 zones. So again, Bank Nifty will be crucial to watch at the opening. It should hold 51,500 for any upside rally.
Okay, all right. So Shilpa, that's on the index. We've got Sudarshan as well to stay on. Sudarshan, hi, morning. Now, we are all bracing for this big, gap down, at least at the open. What would your advice be, Sudarshan, today? How do we navigate it?
Yeah, good morning. Well, we've all been saying that there will come a day when the markets will decide to correct or come down. And I think that day is here today. If you just visualize the chart, we had a gap up. 3 narrow days at the highs above 25,200, 300, but narrow days, and today a gap down. So between these 3 days on the left side and the right side are gaps. That makes it an island. An island reversal is not good news. But apart from the chart patterns, just think of it this way, that we are going with a gap down. The chances are that the 3-day narrow range has been broken on the downside. So at this point, I'm not a buyer on dips. Most people should be having long positions. You have to then just bite the bullet and exit those long positions. But hopefully they have been taken at much lower levels, so it shouldn't be a big problem. I would not, as I repeat, I would not be a buyer on dips today. The market needs to show us that it is willing to go higher, and intraday rallies are not that. It requires much more time. The gap down is not good.
Okay, crystal clear in that view. Sudarshan, got that? You won't buy the dip, but help us out with some stock recommendations for the day.
Stocks, when big gaps occur, stocks become a mess because no one knows where they are going to open and what they are going to do. But with that caveat, LIC Housing is my only buying idea with a stop under 680. At least there is a positional trade there. So even if something goes wrong intraday, you have an opportunity to eventually come out in the green. I have 3 intraday short ideas. Birlasoft, sell with a stop above 670. Manappuram, sell with a stop above 215. And ABB, which is an intraday short again, with a stop above 78.30. These stops have to be adjusted because there will be significant gap downs. But with that, all 3 of them are intraday shorts.
Okay, all right. No, I got that, Sudarshan, and thank you for that. Shilpa, what about you? What are your trades?
I will have 2 buys and 1 sell. The buys would be in chemical sector. One would be UPL.
UPL has given a good breakout above 600. If it sustains, let's say, the today's gap down, we see the stock moving down towards 590 zones or 585. That is also very good levels to add the stock. Keep a stop loss of 580. I believe the stock should test 630 to 615 coming days. The other one would be a buy in Hero Moto. Hero Moto has been constantly showing very strong strength, good momentum on the stock. So any gap down today towards 5600 to 5580, I believe that is also a buying opportunity. Keep a stop loss of 5550 and look for targets of 5800. The third one would be a sell. The sell would be in NMDC. The stock has given a significant breakdown below 220. So as long as it is trading below 220, the downside opens up towards 200 to 195 zones as well.
All right. Thanks very much, Shilpa and Sudarshan, for joining us with those trades. We're going to come back to both of you for more a little later. There's 4 minutes to the pre-open session. We're going to come back with, of course, market and prices, but also the management of Raymond Lifestyle in just a bit from now. Stay with us.
Welcome back. We'll start getting our first pre-open rates in just any minute now. The picture across Asia hasn't changed. I mean, most of the markets are down between 0.5%, that's Shanghai, to as much as 3.5%, which is Nikkei. And that's sort of what we're getting. The implied open is that we'll start with this kind of a gap on the way down, about 160 odd points. So we'll deal with it as the pre-open rates start coming in. In the meantime, let's get you a very interesting corporate conversation. Raymond Lifestyle shares will be listed on the bourses on the 5th of September. That's tomorrow, after the demerger from parent company Raymond. Our colleague Shilpa Ranipeta caught up with Raymond Lifestyle CEO Sunil Kataria and began by asking him about the listing and how the company sees growth prospects going ahead. Take a look.
We have built in very, very strong pillars of the business, and each vertical has got very strong pillars built in terms of its growth, which we have been talking about in various meetings. We clearly see ourselves being able to deliver a very strong, healthy 12 to 15% consistent growth rate over the next 3 to 4 years.
Right.
And we also have seen a very significant transformation of our EBITDA margins over the last 2-3 years. And we see a trajectory of EBITDA margin to be very clearly ahead of the revenue growth. And one piece we are really gunning for and pretty confident is that over the next 4 years, we would like to double our EBITDAs from where they are currently.
So, you have guided your plans to double your EBITDA by 2028.
Yes.
What is going to significantly drive this?
Yeah, okay. So there are 3 factors which are really going to drive this whole doubling of EBITDA margin expansion over the next 4 years. One is there's a very large scale up which is happening across multiple of our businesses. So for example, in the branded apparel business, if we talk, we are gunning for a very, very high double-digit business growth there, which will give us, which is led a lot by store expansion. So we are looking at opening up another, around 500 odd stores over the next 3 to 4 years in our branded apparel business alone. And this is, without the ethnics business. If I were to take all these businesses together, we are talking of around 800 odd stores getting added, including ethnics.
In the next 2 to 3 years?
I would say over 3 years period, So now that's a very large expansion of around 800 odd stores, which is going to happen across multiple brands in branded apparel as well as ethnics by Raymond. In our garmenting business, which is a B2B garmenting business where we are now the 3rd largest suit manufacturer in the world, we have built in a very, very strong vertically integrated play of supplying fabrics and being able to give high-end stitching of suits, trousers, jackets to some of the best global brands in the world. Now that again we are seeing a couple of really big tailwinds playing our way. over the last 2.5 years, we've seen China Plus play out in a very, very favorable manner.
Correct.
And you've seen our business has done very well with a very high double-digit growths, and the EBITDA margins have transformed themselves.
How much of a boost do you see from the Bangladesh, the boost that you're getting from there from a business point of view? Like, do you have a number to it in terms of how much your revenue?
We are seeing a lot of, we are obviously seeing queries happening from our customers.
Okay.
But just to give you context of market size, as India as a mechanism and where it places us in that, I mean, Bangladesh is roughly a $50 billion garment exporter. India is roughly 1/3 of that, you know. And even if, let's say, 10% of the business of Bangladesh shifts towards India, we are very well placed to participate in that shift, you know.
Right.
And that can change the game completely, you know, in terms of the trajectory of growth. Already we are very confident of a very, very strong high double-digit growth in our garmenting business. And now as we see this phenomena happening, I think it's something which can really provide a very disruptive, leap to our garmenting business.
If you look at the last quarter, there was a significant decline in your margins. I think from about levels of close to almost 17-18%, it came down to less than 10%. Can you sort of give me a sense of why there was such a significant decline? And then taking by that, how do you see the trajectory for margins for the rest of the fiscal? And when do you think you will be able to comfortably come back to around 20% levels that you had earlier?
So we have been at a 16% EBITDA margin as a company. So with the first quarter, primarily, if you see, the first quarter also is one of our smallest quarters. So in scale itself, there is, in any case, in the first quarter, the overall EBITDA margins in scale look lower because there's a high seasonality in our business.
Right.
That we start building up from quarter 2, then quarter 3, and then it goes to quarter 4. Against that, as he said, the first quarter, these phenomena of multiple factors played out. So we obviously had a scale deleverage which played out on already a very smaller quarter. So that is, to my mind, a very clearly a one-off phenomena, you know. And we are very confident that there is no structural change to our EBITDA profile. There is no structural change to any trajectory that we have been giving in terms of guidance. And we are very confident that we'll actually deliver the EBITDA margin that we have been giving a guidance for.
By the end of this fiscal...
Yeah, that we should be able to pull back.
Right. You know, wedding you guided is going to be very good for you this time, given so many wedding dates are coming over the next 2 quarters. And you've also recently launched Ethnics by Raymond also. So I just want to understand, wedding business boost, revenue boost, how are you seeing that playing out for you? How much of a boost are you expecting from the entire wedding business?
So as I said that, I mean, India wedding is a huge, humongous industry. If you just see, maybe just the men's apparel linked to wedding occasions, it's something like around 75,000 crore of industry. Obviously, a large part of it is unbranded in India still.
Yeah.
And we are the dominant wedding brand in the country. So I think the next 6 months, very clearly, I see that we'll have a very strong double-digit growth happening in our entire business led by this wedding. Plus, we are doing a lot of initiatives actually to tap this wedding piece, which is something which we discussed. So the first and foremost is our expansion of the Ethnics by Raymond brand. We are at 120 odd stores right now, and we are going to cross 200 stores by the end of the year. So that's a pretty large expansion which is underway right now. And we have seen in this ready 2-year ethnic wear business, there's a huge indexation to when the weddings happen. So we are expecting right from maybe September and onwards, there's going to be a lot of queries, a lot of demand which is coming.
What adjacent categories then are you going to look at going forward?
We have launched a new brand called Sleeps by Raymond, which is just rolling out. And we have been able to crack a product which is top-end cotton with an exceptional affordable pricing.
Right.
And with this, what we feel we can do, that we can be the first branded player to reach across the country and really democratize the market. Democratize the unbranded market and start upgrading the unbranded wear
into the
branded wear.
And how big will this be for you?
Now, this market is really, if you ask me a number, I mean, this can be any number because there is no syndicated study which puts a rupee crores to a sleepwear in India. I mean, there are multiple figures. Some people talk of this being a 12,000 crore market. There's some studies I saw which could make it even bigger than that. The question for us is the market is humongous. And what we need to do is we need to take even a small share of this conversion over the next 3 years. This business can be a multiplier for us. So very clearly what we're saying is this could be, this what we are targeting is a very large disruptive multiplier business for us. and that we want to be the first company to really democratize the unbranded sleepwear in this country.
Right.
Another place that we, along with it, which we saw and which we think is a very obvious adjacency for us is innerwear. Right. And while this market may be crowded, but we think we have a pretty reasonable right to win, given that we have a pretty young brand in Park Avenue. And what we are doing is we're going to launch a Park Avenue innerwear at a mass premium positioning with very, again, differentiated fabrics and styles, which we are looking at in a couple of months, coming in place.
All right, so that is Raymond in focus as a lifestyle business is all set to make its debut tomorrow. Let's now focus on, of course, a couple of the stocks and individual sectors that are going to be in focus. It is 908, so we'll start getting our pre-open rates. We are getting our pre-open rates. Let's quickly refresh. Waiting for the rates to refresh on my screen. There we go. So we've got a 189-point kind of a dip going on the Nifty, slightly more than what the implied open was. But again, that's the gap. The question is whether it gets bought in and what happens as the day rolls on. In the meantime, let's focus on banks. There's a Morgan Stanley note that's out on the entire sector. Let's go across to Abhishek to understand what MS is exactly saying. Abhishek.
Well, largely, Morgan Stanley has cut the target price of lenders, and in their note, they have mentioned that it's time to get selective on banks. So the margins and asset quality will normalize in next few quarters and drive divergence in profitability based on the franchise strength of the lender. So large private banks will do better and see higher valuations, while for select mid-cap private banks or even, PSU banks, profitability could move below cycle averages before NPL cycle turns. So the top bet is ICICI Bank, Kotak Bank and Axis Bank, which are their top preferred picks, while they have downgraded Federal Bank to underweight from equal weight and cut the target price on Federal Bank to 185 from 200 that they had earlier. Back to you.
Okay, all right. Abhishek, thank you very much for that. Let's talk about IEX once again. Vivek is here with details. Vivek.
Well, a quick refresh as far as IEX is concerned. They've gone ahead and given an operational update as far as the month of August is concerned. It's been a very strong month as far as the volumes are concerned on the short-term power market. Total volumes up almost 35.8% on a year-on-year basis. Total electricity volumes up 17.1%. Talking about the key product or the key market that the company caters to, which is the DAM market or the day-ahead market. Over here, volumes were higher by 22.5%, and the market clearing price as far as DAM was concerned fell significantly, down 38% at 4.28. Basically, whenever the DAM clearing price falls, it indicates that there is improved sell-side liquidity. In this particular month, the better monsoons led to much higher hydropower generation. Talking about the RTM or the real-time market, the volumes over there went up almost 27.3%. And very interestingly, the renewable energy certificate of a much lower base went up almost 8.4%. On the back of lower prices, a lot of corporates as well as discoms this time around took the advantage of lower prices to go ahead and meet their renewable power obligations. On the back of that saw a growth of almost 8 times on a year-on-year basis.
Okay, all right, got that. Thanks a lot for that, Vivek. Well, let's get in Sudarshan as well. He's here to give us his 9-10 call. Sudarshan?
Off with a stop above 670.
We missed that, Sudarshan. If you could just reiterate that call.
Birla Soft. Go short in Birla Soft. Intraday short with a stop above 670.
Any view on IEX? My colleague Vivek was just listing out that news piece. I recall the stock had gone to 300, then it corrected to 130, and from there it's seen a bit of a bounce. Any view at around this 200 level on IEX?
Nigel, I don't track it. It's not a popular momentum stock. I'm so sorry.
Okay. No worries.
No, Sudarshan, so let me ask you about any of the defense names. There's a lot of fundamental news flow, positive fundamental news flow on defense stocks. They've corrected from the peak. Do you see a trade anywhere? HAL, BEL, BEML, Masgadoc, any of these names?
I see a trade in all of them, but not today. I think the correction is probably not over. But once they have a deeper correction, all of them become roaring buying opportunities, but not today.
Okay, all right. So, Sudarshan, thank you very much for that with those specific trading ideas and that view as well. Let's focus on a few other names. RR Kabil, IndusInd Bank and Interglobe. Our own Sudarshan is with us now to take us through these. Sudarshan, morning.
Morning, Prashant. So after meeting management, brokerages have written on a few stocks. So first one is City on RR Kabul.
management has reiterated its guidance for FY25, that is 60 to 80 bips margin expansion in wires and cable segment, 25 to 30% YY growth for FMEG, and 20% YY growth in export segment. What does Citi say? It says company continues to show good execution. It has healthy cash flows and balance sheet, and wires and cable industries facing structural tailwinds of strong demand. Next is CLS on IndusInd Bank. It has an outperform call with a target of rupees 1800 per share. Company has reiterated guidance of mid to high teens loan growth. Also, it has maintained 1.1 to 1.3% credit costs and stable margin. Also, CLSA believes IndusInd Bank has adequate provisions made for unsecured businesses, and board will submit its names for MD and CEO to RBI this month. Last is Citi on Indigo. It is a buy call with a target of rupees 5,200 per share. It says there are strong growth drivers for aviation demand in India, and company is well positioned to benefit from this long-term growth, but some inflationary pressures are expected over the medium term, and business class product and loyalty program should augment traffic growth for Indigo.
Thanks a lot for that neat summary, Sudarshan. Well, just focusing on a couple of names, BSE listed rates I want to pull up for our viewers. Capacite Infra, volumes not very, very high, but that stock in BSE is down more than 15%, I think so, 16%. So 20,000 volumes got traded, 16% lower. And GSPL as well, that's the other one that I'm looking at. Out there as well on the BSE, that's down closer to around 19%. So not very large volume, 20 and 30,000 on the BSE, but both these two names are calling for attention because they're down substantially on the BSE rates that we've got.
All right, well, lots to track, and I suspect that at least on the word go, it'll be more down than up. So it's one of those global days where mostly things are down. Big jump in CBOE VIX last night, and of course a 3%, 3.5% cut, led by the Nvidia and the semiconductor space, which sold off aggressively. A bunch of reasons, but I think the takeaway is that perhaps out there in the US, it could be a bit of a corrective kind of a phase. It's possible, and not just like a one-day wonder. Yesterday, of course, was sharp. There was also this element that if you think about it, I mean, the previous day, Monday was a holiday, but on Friday, there was a late 1 hour US market close surge of about 1% or so. So when you look at this 3.5% cut, there was that give back out of the holiday. And of course, then some more because of Nvidia and other reasons as well. So first rates coming up on the Nifty. What do we have? Where are we starting? We're starting at 25,100 straight up with a 150, 170 odd point cut. The sensex is down about 550 odd points. 500 now. 82,056 is where the sensex is at. Bank Nifty starting about 230 points lower. That's about 0.46, 0.5%. 51,450 is where the Nifty Bank is trading at. You've got what else? Advanced decline naturally sharply down, about 4:1, more than 4:1 in favor of what's down. And if you needed a clear kind of sense of, what's happening, just look at the heat map. 4 Nifty stocks are higher, and the rest of the 46 names are actually in the red, at least as far as the starting prices are concerned. So we're in line with what the GIFT Nifty indicative opening was, down about 170. Surabhi.
Okay, I'm just seeing, where the green is. There's not much, barring companies that benefit with the huge fall in oil prices. So your oil marketing firms, BPCL, HPCL and IOC, that's where there's a little bit of a hint of green. And Asian Paints, like Nigel pointed out, that, paint stocks, technically, theoretically, they're beneficiaries when oil prices go down, but then we have different competitive intensity and issues at play here in the Indian market. But for what it's worth, Asian Paints is the second best performing stock on the Nifty. However, the rest of it is all down and out. So ONGC, Hindalco, a lot of profit taking on IT, Wipro, LTI, Mindtree, Infosys, TCS, all of the major IT names, Tech Mahindra with a huge sell-off overnight as well. So IT is seeing a lot of profit taking. Other large stocks like L&T, down about 1.5%. Let's look at Reliance. Reliance is down about 0.5% at this point in time. HDFC Bank is trying to fight back a little bit, but not too many other banks. The Bank Nifty is also down 0.5%. If you look at the other names like an ICICI, it's still down about 0.6%. State Bank of India is still down about 1% or so. So IT and banks not quite working. That's sort of the weak part of the market. We're still dealing with the same blow, 180 points. As of now, still letting the market do its thing and the gap kind of settle very early on into the morning. Nigel.
Well, that's right. Crude prices are weak. So Oil India and ONGC, both of them are lower in trade, getting smacked as we speak, down 3% each. Zomato has had a big run. That stock has pulled back. So two sectors actually have come in for profit taking. You have the commodity-related names like ONGC, Oil India. You have the metal index itself that's under pressure because of the global jitters. That's point number one. Point number two is you have the IT index as well. That's under pressure because of the global jitters itself and what happened with Nvidia overnight, where it lost close on $290 to $300 billion. But there are a few pockets of strength. Pull up OMCs. They are doing well. BPCL IOC, top volume gainers in today's trading session. GMR Power has already had a big run. Take a look at that stock. In a market that's down 180 points, you have GMR that's moving up. That one's up close to around 5% as we speak, and one of the top volume movers in today's trade. To highlight a few more names, Sudarshan had a short call on Birlasoft. That stock's under pressure. It's down 2.5%. Mid-cap IT has pulled back considerably. Birlasoft, Emphasis, Coforge, all of them under pressure in trade today. Strides is higher from the F&O basket, up close to around 1.5%. So it's a weak start on expected lines. The Nifty bank, the reference point that we gave you earlier today, was 51,250. For the time being, that's held out as of now.
Defense stocks, they're the ones that are seeing buying.
On the offense.
Defense on the offense. That's a nice line. But yes, we are seeing between 0.5% to 1.5% on the shipbuilders, on stocks like Mazagon as well. The timing Garden reaches up about 1%, BEML, Cochin Shipyard, some green over here. By the way, check out JK Tyre. I was checking tire stocks. Typically, tires and paints are the beneficiaries with big fall in oil prices, if the fall is going to sustain, that is. JK is better off than the rest. Otherwise, not seeing so much of a move on CAT and MRF. They are fairly flat at this point in time.
All right. Well, so it's that's that kind of a market where mostly it's everything down. Because of what we saw overnight as far as the global picture is concerned. Well, let's welcome in some, technical perspective now. Atul Suri is the market master today. He's CEO of Marathon Trends PMS. He's joining us now on the program. Atul, good morning. Great to have you with us here on CNBC-TV18. Prashant here. Where are we now, Atul, in terms of the market picture? This seasonality going into the election has been talked about widely. It's well advertised. So are we entering a bit of a sideways, even corrective phase for global markets, US especially? And if the answer to that is yes, what does that mean for India here? Because so far, not very much has mattered. I mean, we've continued our up move.
Yeah, I know that we are, speaking on a day when markets are down globally. So obviously the mood and questioning is different. But it's nice to take a step back and, if we look at markets in a little bigger time frame, with a broader brushstroke. Essentially, there are four global asset classes, and I'll cover each one of them to understand where we are. The first is global equities. Again, barring yesterday's move, global markets are at lifetime highs. It's not just India, but even if you find the US is nudging there, a lot of global markets are at lifetime highs. So a 1% move or 2% really doesn't say much. So the first thing is that the quadrant that we like to focus on, which is global equities, they are globally pushing towards lifetime highs. Number two is commodities. If you look at commodities, it was a very big concern. Inflation was a very big concern in 2021, 22, 23. And if you find that even commodity prices are much softer than where they were 2 years ago. So that whole issue of inflation, which was, dominating us, also comes under the lid. The third asset class, which I think is very important and relevant, is US bond yields. And you'll find that there is been a decline in US bond yields. And going ahead, there is a feeling that the Fed is going to cut. And fourth is currencies. If you look at the US dollar, you look at the DXY, which is around 100. So what really happens is, Prashant, dare I say on a day when the markets are down, that actually most of the places that the right thing is at the right place. So all the quadrants are actually behaving out pretty good on a larger or a macro scale. Now, the issue that comes up is, yes, there can be volatility in the short run. September is seasonally known to be a volatile month. And for that, I think it is going to be a reality. We will have to live with it. But as far as the bigger picture goes, the four asset classes that I mentioned, and there is a lot of correlation or overlap that happens. As I said, I'm not speaking for 1 day or 1 week or 1 month. But if you look at the bigger macros, dare I say the world has enjoyed a Goldilocks. in that
And
sense of the term. Goldilocks is when most things are where they ought to be. Yes, it will never be perfect alignment at all points in times. Things will swing just as inflation dominated and recession fears are there. But overall, I don't think there are any very, very big issues. The point where I would be concerned as far as markets go, whether it's globally or India, would be that if we break the August lows. Remember, August was a very volatile month when you had a yen carry trade issue, and again there was some data and there's a fear of a recession. So US had corrected almost 8.5, 9%. Japan was much sharper. India corrected about 4 to 5%. So for me, the reference point for this volatility or for the month is all is well till we don't break August lows. Yes, if we break August lows, then we need to get back to the drawing board and reconsider things. So yes, volatility is there. September has been historically volatile, but the bigger picture, the bigger asset class plays seem okay to me.
And that's very well explained, all the 4 quadrants as you put it, Atul. But would you want to put odds to it? What's the chance, what's the likelihood of that happening, the getting back to the August lows at some point over the next couple of months?
I, for one, would give it a higher probability that we'll break out on the upside. Yes, volatility will remain and it will give us panic. But I do think that global markets have a good 5 to 7% or maybe 8 to 10% higher from where we are. And that goes for India also. So I do think that breakouts were made earlier. Those targets have yet to be achieved. The journey can never be linear. It can never be a straight line. It has to be volatile. And what we are seeing is part of that volatility. So I think it's something you will have to live with. What I'm noticing, Prashant, and which is more relevant, is that in the last 2 months or so, more so I would say post elections, the behavior of sectorial churn is very evident to me in India. And I think for me, I'm not taking cash calls, but for me as an investor, as a portfolio manager, what is changing is that the sector or themes that were leading the market, I feel are changing. And that may be a time to recalibrate and move some things around.
I was just going to come to that, Atul. This is really interesting. I keep going back to your line, right? The trend is your friend until it bends, and it's not bending from what you're saying. We're not at the point of bend, at least as of now. You're saying probably higher chances of a breakout on the upside than on the downside. So now with the overall market context quite clear to us, let's talk about the changes that one may need to make to their portfolio in here. I mean, it's been all about capex stocks, manufacturing, defense, railways, all of that. Do you see anything changing there? And then we've had a lot of false starts on things like large banks or even FMCG. Every day every time there's a scare in the market, we see some of these FMCG names do well, and then they fall by the wayside again. Any changes that you forecast here?
Yeah, so that's exactly the point I was talking to earlier. That in the last 2 to 3 months, what I find is that certain sectors or themes that dominated the markets for 2 years, 3 years have started underperforming, and some sectors have really taken the bull by the horn. So let me name them. I feel that the sectors there are 3 sectors that really stand out to me, which have done very well. One is pharma. I think pharma is one sector which has been pretty much ignored by the market. It's been laid by the wayside, but there are a lot of pharma stocks, and it's a very large sector in India. So I find that a lot of pharma stocks seem to be making new highs. And that's very, very positive because they are bucking the overall trend. The second sector, which again is a very important sector, probably the second largest sector in India, is IT. I also feel that I know that there is volatility today because of NASDAQ, etc. But on a larger theme, I see a lot of IT stocks breaking out. And I feel that that sector or that theme also is playing out very well. Again, something that has underperformed for the last 2 to 3 years. The third sector, which I find again interesting, is the whole consumption space. And this is where your FMCG and consumption stocks come in. So to some extent, I get a feeling that the market is little moving towards defensive, things like pharma and FMCG. And yes, to offset that, you realize that some of the industrials have started cooling off a wee bit. Mind you, they've had a 3-year bull market. So in the last 2 to 3 months, we are seeing industrials a little bit cool off. So I think that's where the point that comes for me as a fund manager is that do we need to change? Because the trend we feel in leadership is changing. And we are doing that because we find some of these places like pharma and IT giving us very, very good opportunities and breakouts. And this is evident also if you look at some sectors which are divided. The most important sector in India is banking, right? You'll find that PSU banks dominated the whole banking space. They were the sector, that are the stocks that did well for the last, again, 2 to 3 years. But you'll find that financials are actually doing very well. So a lot of money is moving into your broking stocks, AMC stocks, insurance stocks, etc. So I find that there's a shift that is happening even within sectors because we term banks and financials in one breath. But I feel banks are behaving separately and financials are behaving separately. So these are the kind of shifts that I'm seeing in the market in the last few months.
All right. Hi, Atul. Good morning and always good to see you in. Atul, just to clear the point on the headline index, that's a Nifty. If we hold those August lows, then we could possibly trend up 8 to 10% even from these levels?
I think so, because if memory serves me right, it was around 23,900,
yes.
Which should be around 5% or so lower from here. So I feel you will have to give the market some space to play. And as Prashant pointed out earlier, that seasonally September has been a volatile month, and one has to be prepared for that. But as I said, the key thing, Nigel, is in my view not going to be the market per se. It's going to be more the sectors and themes, because in these times of churns, what you will find is that new leadership emerges. And I feel that after 2 to 3 years of a secular trend, especially like the PSUs for that matter, you'll find that there could be a shift that is happening here.
Okay, all right. Got that out of the way. Personally, September is a good month for me, but as you're saying, seasonally for the markets, it's not great. So we'll keep that aside. Let's focus on a couple of other trends then. Crude oil prices being lower, a good thing from an India market perspective. And we have a couple of sectors, themes that are doing well. Paints is doing well today because of the lower crude prices, and that's been a rank underperforming sector. So first, your view on crude oil prices. We're holding at around $73 per barrel, which none of the Nifty bulls are complaining. But where's it headed?
Yeah, so I think for Brent to actually come to around 70 would be a good place. 70 has historically been a very big support for Brent crude, and I think that Brent is heading there. Well, if it breaks that, then in fact I find sometimes that it may be in kind of a bit of a worry also, because if commodities crack big time, yes, it may feel good in the short run. Some stocks may benefit, but it may actually put a question mark on the overall health of the economy, because you need commodities for growth. You need commodities in a growing economy. If commodities crack, that clearly would imply that, the world is heading to a different scene where recession or underperformance in a lot of the other stocks would play out. So for me, commodities in a band, currency in a band is always a good idea. If it does too much, it always creates a problem. So as I said, I'm very happy that crude where it is, or even if it goes up to 70. So commodities as a whole, as I said, is something I watch very closely because it's very closely linked to inflation. And remember, the last 3 years have been dominated by inflation. Yes, we are coming out of the fear, but it shouldn't be that they even swing the other side. Because if they swing too far on the other side, it would imply that the demand for commodities is out, which would imply that there is a problem where recession could be coming. So range-bound commodities, range-bound currencies is what I love.
Got it. Atul, do you think, globally as well, right? I mean, in the US, and you watch that market also pretty closely, we will, as you're saying, new leadership will emerge. We're at that point where that market also will do that. I'm asking because the outsized importance, right? 5 stocks, these large tech stocks, is about 30% of the S&P market cap.
In fact, Prashant, it's all reduced to one stock, Nvidia.
And exactly. So I was coming to that. Nvidia, as of yesterday's 9.5% cut, is if 20% is the cutoff for a bear market, it's down 23% from its June highs. So are we at that
Prashant,
point in the US as well?
Nvidia went into a bear market last month also, and again it made a new high. So these 20% rules in stocks like Nvidia, 20% is good for an index level, but in stocks like Nvidia and some of these tech stocks, it's a matter of 1 week. So Nvidia is different. I mean, as I said, that I have never seen. We were talking about FANG stocks and Super 7, but I have never seen one stock actually dominate the market as much as, or the importance of one stock, which is Nvidia, because it affects the whole sector. the whole semiconductor space. Yeah, but then these are realities, you have to live with it, Prashant. At all points in time,
No, no,
there'll be
I
new
completely
names,
agree.
new
And
acronyms.
it's it has affected us well. It has helped, but the question is, it can hurt also, right? So, I mean, any thoughts at all? I mean, if I don't know if you've looked at it closely or.
I have.
I mean, actually, if you look at the S&P chart or the Nvidia chart, I mean, I think it's the same. As you said, it's the same thing now.
Yeah, I know. It has a lot of domination, but as I said that, when a stock moves in that percentages, you have to give it that big ranges also. Like a 3%, 5%, 10%, Nvidia is no big deal because the stock also goes up 50, 70% in a few months. So I feel that that is not an issue. You'll have to look at that stock in its own way. But coming to the bigger question that as far as US goes, I feel that there is immense amount of breadth. The way some of the small caps have started doing well, the Russells, etc., also give you a lot of confidence. So I think that there's a lot more depth, lot more strength in that market, in that economy. One day, I mean, is not doesn't end a bull market. I feel that the bull market has a lot of legs.
Okay, all right, Atul, appreciate you joining in. Thanks a lot for joining in, giving us your view, and we'll keep that in mind. Trend is your friend till it doesn't bend. So we'll hold on to that thought, and looking forward to chatting up with you soon. Well, let's
How do you know
focus
where
on
it bends? How do you know where it bends?
that. You'll join us next time and tell us that, right?
That's the challenge.
Have a good day, Atul, and see you for a walk later in the evening sometime around in Bandra. Take care. Thanks a lot. Well, let's move on then. Fortis Health will acquire 31% stake held by PE players in its diagnostic arm, which is Agilis Diagnostics. To talk more about this development, the way ahead as well, we have Mr. Ashutosh Raghuvanshi, the MD and CEO of Fortis, who joins us on the show. Hi, sir. Good morning. Always good to speak to you, and thanks a lot for joining in here on CNBC-TV18. Tell us about this latest development with regard to this PE stake. What does it take your stake to, and what are the plans out here?
Yes, so thanks for having me. So this was something which our PE investors had come in year 2012, and they have been very good partners for the business. We did have an obligation to provide them an exit, and they had a right to have exercised their put option, which they have. And this 31.8% for about 1,778 crores is what we are going to acquire. And that would take our shareholding to approximately about 88% post this acquisition.
Okay, all right. So the amount you're going to be spending is 1,780, right?
778 crores, yeah.
How do you fund this?
So we are an FOFC company, so we have to use an FPI debt route. So we will be, board has approved a listed secured non-convertible debenture for 1,550 crores, which we are applying for all the necessary clearances and shareholder approval. Once that is done, then this would be concluded.
Okay, all right. And what about an IPO then? Since post this particular deal, the next trigger the street will be looking forward to is what are the plans with regard to a listing? Back of an envelope calculation suggests that, it's currently valued at around 550 crores, 5,500 crores or thereabouts. Your comment on that?
Yeah, so Anuj, that's not something which we are focusing on right now. There are several reasons for that. And one of them is, that this business has underperformed to some extent, as you're aware. And we have had a lot of headwinds. The brand change had a negative impact as well. And then there was, some impact from the increased competitive intensity as well. So our focus right now would be to create these channels and digital channels, especially increase the presence in the specialized tests, genomics, etc., and improve the performance, bring it at par with the other industry players before we think of any event now.
Got it. So no IPO plans as of now. Mr. Raghuvanshi, this is Nigel on this side. And I have just one more query on this particular deal before we close the loop on this. As you said, the performance has yet to catch up. I think in the first quarter, the growth was low single digit, with margins in those high teens. What's the outlook for the remainder of the year on this particular asset?
Yeah, sorry, Nigel. So yes, that definitely is been the case, but we are seeing the performance improve. The revenue was kind of static for the last quarter, but we are seeing some improvement happening there. And all the efforts which we have started doing on the operational side in terms of increasing our contact points, etc., is yielding results. Certainly, the profitability is improving, and we expect the performance to improve from the previous quarter.
Mr. Raghuvanshi, hi, good morning, sir. Just to give us an update for the second quarter so far for the hospitals business. What's the, so far, what is occupancy looking like, and RPOP, etc. Just some sort of numbers there for Q2 so far.
Yeah, so Q2 trend has been good. The occupancy numbers have slightly improved from the previous quarter. We had about 66% occupancy in the previous quarter. Now we are trending around 67 to 68% at the moment. And the RPOP numbers, as I had said earlier, would probably grow in a more modest way going forward. But so far, the growth has been good. And we are seeing that as a result of essentially this is coming on the backing of improving the case mix and also the surgical numbers improving.
Okay, got it. Every time you're on, Mr. Raghuvanshi, I always ask you about that IHH bit. And is there any movement at all? What's the latest? He's not kept the stock back, or it's not. Investors have, of course, looking forward to it, but it's not as if it's really hurt them because stock's done well. But any movement? It was going through the sort of courts and legal process. Can you tell us what's on?
Yes, so the High Court hearings have been happening very regularly. We expect that these hearings are almost towards conclusion. So there are maybe 1 or 2 dates which we will probably get, and that is happening within the month of September. So I think some resolution on that side would happen. At the same time, there is a movement on the brand side as well. And if we get the brand at a reasonable price, we would certainly be looking at acquiring the brand as well.
Sorry, could you explain that, Mr. Raghuvanshi? What do you mean by that? Acquiring the brand?
The Fortis brand. So right. The Fortis brand, as you might be aware, was belonged to the erstwhile promoters company, and that is attached to towards the proceedings in the Daiichi case. So Daiichi has made an application in the court to resolve this brand matter and give them the necessary payments. So we are sort of there in the High Court, and we will try to acquire the brand if there is a reasonable price at which it is available. And this matter is also likely to get resolved quite soon because this is already being heard in the Honorable High Court.
And these are two separate matters, right? The IHH and, of course, the brand matter. And
Yeah, these are two separate matters.
And what you said reasonable price? What are we looking at in the ballpark? If you can give us some indication.
So this matter is sub judice. I would not really like to comment because Daiichi has submitted some report on what the valuation should be. And so I would not be able to comment on that at the moment.
All right, very quickly, Mr. Raghuvanshi, before we let you go, we understand that you were looking to sell those not very profitable hospitals. Have you outlined that, the ones I think with margins of less than 10%, and by when do we see this take place?
So we have already exited 2 hospitals in Chennai last year, but there are few other smaller hospitals which we would look at, but those are not the larger ones. They are just the small facilities. We would probably be evaluating that, and maybe one of them we would try to exit within this year.
All right, Mr. Raghuvanshi, thanks a lot for joining in and giving us a fair idea about the recent deal, about how the hospital business is shaping up and also your plans going ahead. We look forward to having a chat with you in the coming weeks. But for the time being, we'll slip into a short break. On the other side, We'll have Mr. Thiagarajan, the MD of Blue Star, to discuss how demand trends are shaping out. We'll also get you excerpts from our conversation with the top management of Bajaj Housing Finance. Stay with us.
Welcome back. So the market's still dealing with that cut of about 170 points. That hasn't changed for now. The Bank Nifty is actually down 400 points. So an eye on this index for sure to see how things progress. But banks and IT both fairly weak, at least at this point in time. Let's now put the spotlight on Blue Star. The first quarter was a fairly good one for the company, with strong revenue growth coming in and the sizzling, scorching summer leading to, of course, robust AC sales. Let's talk about how the company is now gearing up for the festive season and how the second quarter has shaped up. Well, we have with us Mr. Thiagarajan, MD of Blue Star. So great to have you on. So you started off the year on a very, very strong note, and the guidance for the full year is also fairly robust. I think you're looking at 20-25% top line growth. But let's talk about the here and now in the build up to the festive season. I mean, what is the channel inventory like? And are we going to see a lot of competition, more discounting, etc.? What are you forecasting and envisaging as the season kicks off?
Good morning, Shilby. It's a pleasure interacting with you. Yes, the year started off well with a great summer season with over 50% growth. Industry has done well. We have done well. And we look forward to a great festival season. As you may recall, the last year festival season was a great one. The growth was over 20%. That came after a very bad summer season. So one will have to wait and watch if the summer season would have been great this year, how the demand is going to be. But going by the feedback from the channels and the market, I think, again, 15 to 20% growth during the festival season is very much possible. As far as the prices are concerned, we all increase the price due to input raw material cost escalation only in the month of June. As of now, the prices are stable. And I do not think that there is going to be discounting in a big way during the festival season. Having said that, it all depends on how the market is going to behave.
Fair enough. So while you're confident of at least 20% festive season growth, I suppose a lot of that will actually show up in Q3, right? Towards the latter half of September, October onwards, when we get into the season full bloom. Now, for the second quarter, could there be weakness? Because we've had a very extended monsoon. June, actually, the monsoon didn't take off. July, August, and maybe even extending into September. So could that be a bit of a dampener on just, Q2 sales?
A couple of points. The first one is July was a good month. July forms part of Q2, fortunately. And there is already, due to Ganesh Chaturthi and Onam, some kind of pickup is there in the market. So therefore, it may not be a bad quarter as far as the room air conditioners are concerned. Still, there will be growth. I think the growth even in Q2 should be a double-digit growth. And as far as Blue Star is concerned, our portfolio covers even B2B in a big way. The commercial air conditioning, commercial refrigeration, these businesses are not dependent on summer season. We are doing extremely well in commercial space.
All right. Hi, good morning, Mr. Thiagarajan. Good to see you, Ben. Tell us about the industry dynamics, the demand-supply situation. How is it? There was a bit of a mismatch, I understand, earlier in this fiscal. How is that panning out?
Good morning, Nigel. The mismatch was a welcome mismatch because the demand, as you know, in April was over 70%. Again, in May, over 70%. Overall summer, more than 55%. So there was mismatch. But there is absolutely no problem now. The supply demand will be met. The industry is doing well. Localization has taken place in a big way. The only constraint we are all facing is with regard to certain raw material supply chain, which are import dependent, like the compressors or microprocessors or copper. and but that should not impact any demand for the summer, for the festival season. But the building up to the next summer season, we all will have to plan, and we are in touch with the government. We are in touch with other stakeholders in order to ensure that we are able to deliver the higher demand that is taking place. The market is growing, and it is the era of room air conditioners. This is a category which has the potential to grow exponentially.
Okay. I wanted to ask you about, there was a headline yesterday that the world's #1 air conditioning company, Daikin, has signed a MOU to sort of set up a new factory on a 33-acre plot in, I'm not sure where, but it's in South India. So, I mean, but we've spoken enough about this in the past, right? I mean, a lot of capacity, a lot of competition, and you've sounded more benign over the last couple of years, saying that, it's not from looking like it was going to be an excess amount of supply, it's going to be evenly matched now. So you'd stick with that, right, sir? Briefly.
First of all, Prashant, it's nice to interact with you. We have also procured land of area 40 acres in Sri City. Sri City is becoming the new air conditioning or consumer durables hub. Who is who of the industry is present there, or at least in Chennai. So earlier it used to be concentrated in northern region. Now Sri City and Chennai has become important destinations for room air conditioners. Now we had commissioned a factory which was 20 acres, and we have another expansion plan for 40 acres. That construction should begin within the next 1 year or so, or at least within a couple of years. Now, what I meant last year when I interacted with you in some forum is about PLI scheme. We think PLI is based on production, but PLI is earned only by incremental sale. Now, if you look at 2023 to today, the manufacturing capacity has grown by 50%. If you take 2022, by now it would have doubled. Whether the market would double is the question. If it is not doubling, what will happen is we all have to show incremental sale in order to earn the PLI. So whether the capacity is getting expanded more than required, yes, I think so. But going by what we experienced in summer season, it is good that it happened. Now, between now and 2030, from the current market size of around 12 million units, it will be more than 28 million units. We are looking at 2030 as a 30 million unit market. And in that context, that fear is no longer there. You are right.
We need all the expansion that there is. Thank you very much, Mr. Tyagarajan. Very well explained and put it in context. Appreciate you joining in, and good luck to you and your team as you execute on some of those expansion plans. Bajaj Housing Finance's much awaited 6,500 crore IPO will open for subscription on the 9th of September. The issue includes an offer for sale for 3,000 crore rupees and a fresh issue of 3,560 crore rupees. My colleague Rima caught up with the chairman Sanjeev Bajaj and managing director Atul Jain on the IPO and, of course, what's on offer. Listen in.
Clearly, the RBI requirement, given our size and being in the upper layer, was to list before September 2025. But what's equally important is that while Bajaj Housing Finance is only a 7-year-old company, as you mentioned, assets as of 31st March 24 at 91,000 crore, the fastest growing housing finance company, the largest non-deposit taking housing finance company. So it becomes important to diversify our sources of borrowing as well. Our capital has all come from the parent, that is Bajaj Finance, the last 7 years. So it's a combination of size and the RBI requirement, both I would say.
So talking about size, now your balance sheet is nearly 1 lakh crore rupees, I think 97,000 as of the June quarter. Do you think the current scale and size is a hindrance for the company to continue growing at 30% that you've seen over the last couple of years?
So let me start by saying that the opportunity for housing in this country, not only because of the way the country has been growing the last decade, but also the additional focus that the government has brought in so that there is housing for all. There is a long way to go. And while we don't target any particular growth number, we've been able to see very strong growth in the last 7 years. And this is on the back of both the opportunity that exists, the capabilities that the management has built, which Atul will talk about a little bit more now, as well as the high quality performance parameters that we've been able to report quarter on quarter. But I'm sure Atul will detail more.
So do you think 30% is sustainable?
Surima, like Sanjeev called out, we do not target a particular number. Of course, the market size is very large. If you look at a housing market itself, let us say home loan market, which is the largest part of a mortgage market, the market by plus some estimates plus minus was 30 lakh crore plus as of AUM in the country. Loan against property 10 lakh crore plus. So the kind of a market size which is there, compared to that, our size, relative size of a 91,000, 97,000 crore as of a 30 June still remains small. So we have an opportunity to grow, but we are not guided by a particular number. Subject to opportunity, market opportunity, and our ability to take space to the extent what we can take. Happy to get the outcome. More important and relevant part is, the market being very large is one part. This is also growing at various estimates on the industry at a 13 to 14% kind of a CAGR, which is a very high pace of a growth, and the way forward for the industry as well, given housing focus of the government in the country, given low mortgage to GDP ratio of India compared to even other economies.
Has the competitive intensity come down because HDFC Limited, the giant in the space, has merged with HDFC Bank?
At this point of time, the competitive intensity is still high, and it's not only despite HDFC having merged, but if you look at the overall lending opportunity in the country, the one segment where banks would be traditional lenders in the private capex space for corporates has been slow, though we've started seeing some green shoots there the last few quarters. And in the absence of that, banks have participated in lending for homes because that is the largest retail asset class and one of the safest retail asset classes as well. So yes, so the competitive intensity continues to be there. But on the other hand, what's life if there's not competition? That's what creates some fun.
And what about the average ticket size? Because your average ticket size is about 46 lakh, and that's much higher than the peers. And you've opted to operate in the prime segment, which is giving home loans to 50 lakh plus. So is there going to be change in that strategy? And what about affordable housing? Because you've set up a strategic business unit to cater to that.
So Rima, we are not, we don't exclude, like I said, that we are operative in all segments and all sub-segments of the market. But at a point of a time, the focus can be on a particular segment. So the focus in the past had been largely on the prime with the dominant portion of the salaried book, which is reflective of the book composition or the ticket size of the book. But we are present in whether affordable or non-prime. Because there are no standard definitions, that's why I'm choosing to call non-prime whether affordable or a mass affluent. And basis the experience, basis again the risk metrics, what we see, basis the returns, risk-adjusted returns, what we see, the mix will evolve.
So Sanjeev, talking about this current IPO, it's an offer for sale of 3,000 crore rupees plus a primary capital raise of 3,560 crore. So this primary capital, fresh issue, is going to be growth capital. You're one of the fastest growing housing finance companies. So this money that you've raised is going to suffice the company for how long? When do you think next the company will need to come to the market?
Well, with the internal projections on where we are likely to be in the next couple of years, and which today I'm not at liberty to share with you, but once we are going public, right? Once we are a listed company, as I said, that thing could change, that situation will change. But we think for the next couple of years, this should suffice. And as you know, we have the requirement to dilute 25% over the next 3 years. And depending on how growth is going in the coming years, we'll take that call between primary and OFS.
Okay. So when you say couple of years, we're talking about 0 to 3, 3 to 5, more than 5?
Right now, this capital should be for the next 2 to 3 years. But again, as I said, it will all depend on industry growth, our growth, so I'm not trying to project anything right now.
You always think long term, right? So today, promoter stake comes down to 88%, approximately. Eventually, you will bring it down to 75%. What about thereafter? Will Bajaj Housing Finance continue to remain a subsidiary?
Our plan right now, keeping in mind that we have a very long journey before the risk of not being a subsidiary for the foreseeable future, very much so.
And what will Bajaj Finance do with the 3,000 crore that they're raising?
Well, Bajaj Finance is also very much a growing company, so it will continue to use that capital for future growth.
Are you seeing any signs of stress in the market right now? Your asset quality is best in class, pristine, if I may use that word. But are there any signs of stress?
No, not in the housing finance space. In the segments that we are in, a combination of very thoughtful acquisition strategy, leveraging data, leveraging analytics has helped us ensure that what the business that we have built in the last 7 years, and even as we see it right now, is of high quality. So these are also choices, Rima, to be made. And you asked a question on affordable housing finance as well. Now, as we build out each of these business lines, we are also thoughtful to not just do everything together, because then you end up taking disproportionate risk. We are balancing it out by building the teams, building the tech capabilities, the distribution ability, trying to understand what customer segments we need to participate in, and that way gradually build out each of these lines. And as we gain more experience, and I'm sure we'll make some mistakes, we learn from that and apply that back. And that's been our learning from Bajaj Finance over the last 17 years and our learning from housing finance the last 7 years.
Okay, well, that's an interesting chat with the management of Bajaj Housing. That's the big housing finance lender which is making it to the market. That's Ecos India Mobility, the listing ceremony out there at the NSE. And you've got representatives, bankers, promoter, of course, and the family celebrating with the gong going. About 17-18% higher is what you have coming through on this one right now. So it's a strong one. But of course, I mean, we've had stronger. You had the Premier Energies one yesterday, which of course was almost a doubler at the word go. In a subdued market like today, a 20% pop, not bad, and volumes are pretty large as well. We'll have more on this as we go along. Shilpa Rao, the Prabhudas leader, is with us. Shilpa, good morning. Good to have you back. So, you know, we are holding with a 170 point cut, 25,100. What would you do here?
Prashant, yes, like we spoke in the morning, I believe that 25,000 is definitely holding on. From here, 25,300 is again one, target that one should look for. And Bank Nifty, like we've already discussed, 51,500 has to hold again for any sort of upside. So Bank Nifty will be a wait and watch. Nifty can still be a long side trade from here.
Okay, all right, got it. Thank you very much, Shilpa, for that. We'll take a break on that note with the news that individual stocks are actually doing much better. Shilpa, actually, speaking of individual stocks, what about beyond the index? I mean, are you looking at any stock-specific trades today?
Yes, Surbi, I would like to again focus on Hero Motor. Hero Motor in the morning, like we've spoken, it has taken good support at around 5,600. Now the stock is trading at around 5,700. I believe it is still very strongly placed for targets of 5850 to 6,000 this series. So very strong upside for Hero Motor from here. The other one would be a buy in UBL. I mean, all the entire space, the brewery space is actually buzzing now. UBL is very well placed. Now the futures trading at around 2050 from here. Keep a stop loss at around 2025 and look for targets of 2100 to 2120. And the same has been recommended in Prabhudas Leader today as well.
Okay, all right, got it. Shilpa, thank you very much for joining in. You have a good trading day going ahead. Before we take a break, we should pull up the mid-cap index because while the Nifty is still kind of struggling with that 160-point gap down, mid-caps are doing better. There's a lot of individual level stock-specific action going on and that index kind of tells you the story. Pull up NIIT. There's a block trade on NIIT. Remember, NIIT has been in such sharp focus with promoters adding to their shareholding, with Mr. Ramesh Damani checking in. There's another block this morning. I think about 0.7% equity moving around, and the stock's up 10% after that. So lots of stock-specific action. Let's take that break. We'll come back on the other side and put the spotlight on commodities, see how the commodity markets are shaping up. Welcome back. So we've seen the equity market reel under the impact of what happened overnight and the whole Nvidia issue with the US subpoena. Let's find out what's the latest in the world of commodities. We have Manisha Gupta joining in with exactly that. Manisha, earlier we discussed crude. What else are you looking at now?
Well, I'm still talking about crude. Have to put that point across because a very sharp decline is what we are working with. You know, the month of July and August saw the crude oil prices trade in the negative, and the September is started with a very sharp decline onto this one. An overnight decline of 5% is a huge one. The markets were anticipating further decline in crude oil prices, but a 5% cut is something that not many were expecting. So we are now trading at a 9-month lows when it comes to crude. We've broken below 75 for Brent, below 70 for the WTI crude oil prices also, and the charts only have gotten weaker from here. Also, when you look at the Chinese data, all of that has been coming on the weaker side. The manufacturing PMI was weaker, that came in yesterday, and the services PMI number that came in today also has been lower than what the street was anticipating. And then this is a hanging sword really, with OPEC and members will now be increasing production starting from the month of October and gradually increasing it until September 2025. So October will bring in an extra 180,000 barrels per day from OPEC and allies. That would be increase in supplies. Not just that, resolution also seems to be in sight when it comes to Libya, and that was one factor that was supporting prices. But production could be coming back. Exports could begin from Libya starting as early as next week itself. It's something that's weighing onto the markets as well. So when you look at the overall Libya numbers, what the street is looking at is that 959,000 barrels per day is what we saw previous week. This week it declined to 591,000 a barrel. But the kind of high that Libya has been producing, so when you look at the July numbers itself, it has been at 1.28 million barrels per day. So if all of that starts coming into the street from September, that means there is increase in supply from there as well. And it's not just about crude oil prices. If you look at gasoline, well, you have futures declining by 6% overnight. It's a 32-month lows for the gasoline prices also. The U.S. summer driving season is just about ended and the demand hasn't been so great. So if you look at the gasoline inventories, well, those also are high at 218.4 million barrels, which is higher than what we saw in the previous year. So this is another factor. It's not just that. Heating oil prices also have continued to decline. That one is trading at a 15-month lows. We've seen 4.5% of a decline in last month. And the dollar index trading at a 2-month highs, rather 2-week highs, is another thing that continues to weigh onto the market. All eyes right now, of course, are the global markets and then the U.S. non-farm payroll data. That would get you on where the street can move on from here.
Okay, all right, Manisha, thank you very much for that. With that, let's move back to stocks now. We have Yash back with us to talk about GIC-RE, where the government is finally going to be selling some of its equity stake. Yash, what are the details?
Well, Surabhi, it's been a long-awaited offer for sale in this particular counter, that is GIC-RE, the company listed back in 2017. And since then, there has been no dilution from the promoter, that is government, as far as the stock is concerned. Government still holds about 85% stake in GIC-RE. 15% is all we have in the public market, out of which 5% again is with LIC. So in absolute terms, very, very limited stock in the market. But now with this OFS, in the larger context, it will be a positive because there'll be more supply into the public market. The government has decided, to launch the OFS today. As far as the total size of the OFS is concerned, 5.95 crore is the base issue. Another 5.95 crore would be a green shoe option, totaling to about 6.98% stake additionally, which the government would be supplying into the market. The stock is down about 4.5% today, and that is largely because of the discount which has come in, 6% discount to what the stock closed yesterday. The market was anticipating the discount and the final price, the floor price, to be more than 400. That came at about 395. The stock digesting that particular point, but in larger context, certainly positive, as there would be more supply of paper into the market as far as GIC-RE is concerned.
All right, Yash, thank you very much for that. That's GIC-RE in focus. Now, Godfrey Phillips has finalized the sale of its retail business to a startup called New Shop. Sources have said that the term sheet has been signed to transfer 24/7 stores, and the transaction will be completed this month. My colleague Ashmit is here with details. Ashmit, take it away.
Well, an important development this coming in from Godfrey Phillips, especially ahead of the September 6th AGM. What we've learned, what sources tell us, is that the company has finalized its plan for sale of its retail business 24/7. The format, 24/7 format stores will now be sold by Godfrey Phillips. Those plans have been finalized. Importantly, it's being sold to a startup, the Delhi-based startup. The new store essentially already is in the convenience store business, has about 160 stores across 35 cities. That will be the company taking this forward. Now, what's important is that the term sheet importantly has been signed. The talks have been underway for a very long period. The term sheet importantly has been signed, which signifies, of course, forward movement in terms of when this transaction is to be closed, in terms of timelines. Both the parties are keen on moving aggressively and closing this transaction as soon as possible. The timeline that we hear, that they tell us, is the end of September is when they're looking to close this transaction. And in the spirit of wanting to close this transaction, what we also pick up from sources is that there are efforts already underway by both sides for beginning to transfer the stores and the assets of 24/7 to new stores. So a hugely important development this, especially in light of the promoter dispute which is underway as far as the boardroom is concerned. The reason being that the executive director, Sameer Modi, has been steadfast in his opposition to the sale of 24/7, the retail business. Beena Modi, of course, and the other board members, the broader board members, are in agreement with the sale of the retail business. So there is some amount of underplay there, some amount of undercurrent there. We'll, of course, see all of it play out at the AGM on September 6th.
All right. Thank you, Ashmit, very much for that. Well, with that, we head into a quick break. On the other side, it's our segment, It's the Economy. Today, Lata will connect with Mridul Sagar, former RBI ED, to discuss the workings of the current inflation targeting framework.